Welcome to the podcast about investing in startups, where existing investors can learn how to get the best deal possible, and those that have never before invested in startups can learn the keys to success from the venture experts. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back for another edition of Investor Stories. On this special segment, the experts describe the most important lesson that they've learned and how that has changed the way they invest. This is the special segment called Lessons Learned. On today's special segment, we have Bradley Tusk of Tusk Ventures. Bradley, can you tell us a story highlighting a critical lesson that has changed the way you invest?
Yes, I can. What we learned early on, because our model was a little unique in that we're going to work with startups in regulated industries. We're going to get to know these companies really well because we're going to be under the hood, solving their problems, working with the management team all day. And then based on that diligence, we would know whether or not to deploy capital. And the hard lesson we learned is we were raising the valuation on ourselves because we'd come in, let's say, at the A, start working on the problem, solve it, or at least solve a chunk of it. And as a result, the B, valuation would go way up in large part because we solved this problem. And so if we're first working at the A and then investing at the B, we're totally raising the price on ourselves. Our LP said to us, look, it's nice that you have this sort of extra form of diligence, but realistically, we're missing a lot of opportunity here. We want you to go earlier. So we went initially from working with a company, getting investment rights, and then deploying capital to now simultaneously working and deploying capital, which means we're coming in earlier and earlier. We are taking more risk, but we're also seeing a lot more upside.
On today's special segment, we have Jim Kim of Builders. Jim, can you tell us a story highlighting a critical lesson that has changed the way you invest?
So many critical lessons being in this business, but I think entrepreneurs are amazing people. We as VCs, I think our job is to just support them the best we can, and it's a very lonely job. And I don't think I quite understood that. Like coming out of corporate VC, the mentality was more of, hey, I want to get in that deal, right? I want to be part of that deal. That's dehumanizing for the entrepreneur. And so early on in my career, I was very focused on the deal terms and the structure and just being part of a great syndicate. And that was so much of the focus. And I think if you come out of the finance industry, that's how you just look at everything. But I think the core lesson in this business that has been part of my DNA since the time of Kozla and through Formation 8 and Builders is the deal doesn't matter, right? What matters is the entrepreneur. And so creating a framework, creating an interaction cadence with the entrepreneur is the most important thing you could do. So that if the entrepreneur has a tragedy in the family, that they would feel cool about calling you and having that discussion, and you're encouraging them and providing a level of support to help them get through a tough time. Because ultimately our investments are successful not because of us, but because of the entrepreneur. So how do we put them in a position to win? And that's kind of been the focus of our firm and what we try to do for the entrepreneur, because it is such a lonely job. So I think that's a core lesson. It's you don't win because of your deal terms, or you don't win because of how you structure something. You win because you put the entrepreneur in the best position to maximize their probability of success.
And pick the right ones.
Yeah, that too. Yeah, that's hard. Yeah.
On today's special segment, we have Jenny Rooke of Genoa Ventures. Jenny, can you tell us a story highlighting a critical lesson that has changed the way you invest?
Yeah, I think one of the big lessons I've been learning over the last couple of years is in some ways the flip side to a positive that I'm very proud of. As early stage investors, something that I enjoy doing and I'm good at, which is engaging with founders early on, catching their vision for what the company can ultimately be, how big it can be, how much impact it can have, over time, and really seeing, again, with that end in mind. So that's great, and love to offer that as a partner to our entrepreneurs. But one thing I've noticed that I can do that gets us all in trouble is to fill in maybe too many gaps for the founding team. The test is if the strength and clarity of my vision for the company and its potential outstrips that of the founding team, then I'm not helping, right? I should either put down my VC tools and join the company and help them build it, or recognize that it's their company and it's only going to be as big and as impactful as they can define and as they want to run after. And having that, of course, appreciation and respect for their role, but also recognizing that I'm investing in their plans, not mine, for the company is really important for alignment and really important for our mutual success.
In the case where there is just a missing maybe element on the team, will you make that suggestion to the founding team? Say, I feel like maybe you need, some data science help here and we could help you identify that? Or is it less about sort of coaching and giving advice and more about just kind of letting them find their way?
Yeah, I think there's a couple different layers there. So if it's to your specific example, if I see a gap in thinking or skills that a person or a team could fill, I'm very happy to give that kind of feedback because I think it's very actionable. That's the hope. The hope, anyway, is to say, hey, I think the sort of person that you could bring on who could really help crystallize your go-to-market plan looks like this, and talk about that. And that could be whether they're in my portfolio company or we're just getting to know each other and they're asking me for feedback. But where it doesn't work is really at the highest level of what is the vision or the objective for the company. And if I think there's something kind of bigger than they're currently envisioning, then I might mention it and see if they get excited about it and decide to go for it. But what I shouldn't do is expect that they're going to live up to my vision if it's different than theirs. Got it.
Yeah, I was having a chat with my team just yesterday about factors that can be changed and factors that can't be changed, right?
Yeah.
Like decision making is not something we're going to fix. That's it is what it is. That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.